Perfect. Hi, everyone. Great to meet you all. I'm Waverly. I'm an investment associate with Slauson. So working very closely with Jesus, getting to meet founders and then performing due diligence on them for a potential investment.
Morning, everybody. My name is Mickey Reynolds. I'm the head of programs for Slauson. I lead our Friends and Family Accelerator, as well as other programs that push our mission of economic inclusion forward.
Hi, everyone. Great to see you all on this fine Tuesday morning. I'm Eileen Kim. I'm the platform manager. So I work mostly with the founders that we've already invested in, just supporting them and anything they need. And I'll pass it over to Jesus.
Thanks, team. And then briefly on my end, Jesús, principal with the firm. A quick high-level overview of Slauson Co. We are an early-stage venture capital firm rooted in economic inclusion. We are going to be deploying capital from our second fund of $100 million. We've deployed our $75 million first fund as of the end of last year. So excited for fund two. We lead pre-seed and seed deals. We have 38 portfolio companies so far. We also have an accelerator, which Mickey mentioned, or it's called Friends and Family. 20 companies receive $150K for 5% ownership. That cohort will start next month, and applications for next year's cohort will come out this fall/winter. And our name, Slauson, is tied to Slauson Avenue in Los Angeles, where the majority of our team is located. And it's also where our general partners grew up. The ANCO alludes to everyone in our ecosystem that we hope to activate in supporting our founders in their missions. And we're investing across the US, primarily in two distinct areas. The first being SMB tech, which is our B2B thesis, so tools supporting small business owners. And then the second, our consumer thesis being what we call culturally aligned consumer, which refers to companies building scalable products or services targeting overlooked demographics. That's a quick bit about our investment thesis and firm. We'll drop a link in the chat to a deck that has a little bit more color as to what I just mentioned here, but I'm going to share my screen just to kick things off. So again, today's topic, which we'll cover for the next 20 to 30 minutes, depending on how many questions we have, is around a pitch meeting. We'll cover high-level structure and framework to think about a pitch meeting, depending on those of you that have maybe had a lot of them. Some of you maybe not as much. But again, for those of you that have had a lot, please feel free to share your opinions. Every firm, I will say, is different as to how they prefer that these pitches go and are structured. So this is our firm's perspective and our advice in terms of how we tell our founders to approach pitch meetings. And so just to lay the foundation for the pitch meetings that we have with founders that are seeking to raise capital from us, it is an official in the sense of we're meeting usually with a subset of our team. 1 to 4 different team members are going to be on the call from our end. This is after we've already decided to engage in a conversation, typically after having seen some materials, just so that we're respectful of the founder's time and our time in terms of there might be an area that we don't invest in. And for example, we have some red lines around adult content or things of that nature, or gambling, for example. And so if you're a startup doing something in that space, that's not bad. That's just not an area where we can legally invest in. And so we don't want to waste your time and we want to be respectful of our time. So ideally, we review the materials beforehand, decided to engage in a conversation. And then typically we structure them in 30-minute formats. And the way that it usually flows, or I will say the way that it flows the best is whenever we introduce ourselves initially. Just we'd like to do this, and we've gotten feedback from founders that it's very helpful for them to have this information. It's basically the similar information that I shared earlier today, coupled with some that's in the deck that was shared. But basically making sure that you leave our conversation understanding our firm, what we do, and letting you ask questions. At the very end, we typically share our process. which at a high level is a number of conversations, ideally meeting in person, and then us doing our own due diligence, eventually leading in an offer or not. But this again is focused on the very first initial pitch meeting. So we introduce ourselves, try to make sure that the founders have, we like to make sure that our introduction can answer all the questions that they may have had coming into that meeting for us, so that they're not focused on trying to track that down at some point during the call. So that's our introduction, and then we turn it over to the founders. Typically it's one founder. Sometimes there are two if it's a co-founder situation, which is fine. In a couple of slides, we'll talk about if you have like 3 or 4 founders, how you should approach that. But we let the founders introduce themselves. We really, especially because we're investing at the earliest stages, i.e. pre-seed and seed, where a company is at its earliest stages. And so we like to understand before getting into the company, the founders and their backgrounds and what's led to their journey up to now to start the company. We often say that your lived experience is your competitive advantage. And so we want to understand, how is what you've done up until now driving what you want to do with this company? And so we want to understand that. We want to understand not necessarily the personal per se, but more so the motivations behind your drive and your mission as it relates to this company. And then we want to get into the company as well. We want to understand what you're working on, where you are with it, who's involved, what you're hoping to accomplish. And these are questions we'll get into the next slide as well. But we like to aim for about 3-minute split. Again, there's no hard, oh, you hit 3 minutes, so you should stop. But you definitely want, we appreciate whenever folks share a bit about themselves personally, and then get into the company. So if you think about the first 3 bullets being 10 minutes of a 30-minute conversation, this way, the 20 minutes remaining, you're left with an ability for it to be a conversation. And hopefully your introduction leaves us being the investor listening to your pitch with questions about, I want to learn more about X, Y, or Z, and that's where you can get into that in the Q&A. Maybe I'll pause here to see if there's any questions on anything that we've shared so far. Feel free to come off mute, raise your Zoom hand. Please.
Are there team introductions as well? Do we do that in the founders?
You can do the. Oh, sorry. Go ahead.
I would just say I have some leads on my team who are really close and been building the product with me. So I was wondering if they're a team.
I would say if it's if the team that you're building is part of your story before the company, put it in the founder introduction. If they've come into your world because of the company, you can do it in the company overview. But definitely give a high level. You can say, hey, I'm working on this with 3 other people. I have 1 co-founder. Maybe just highlight the co-founder's background and then the titles for those other 3 people. You don't have to go into super in depth, because as long as you've shared that high level background, maybe of your co-founder if you have one, or the titles of the leads. And then we can ask, oh, I'd love to learn more about the backgrounds of those 3 people in the Q&A.
And in this, I guess, what's the timing of this pitch meeting? Have you already seen, like the pitch deck and the 5-minute pitch, or, is this farther along in, hey, you already know something about this company? This would not be an initial meeting, right?
It would be. It would be. And the way that we like to approach it is ideally having seen the information already beforehand, more so not for us to, for us to, again, understand what you're building and how it may or may not line up with what we're focused on. And we do review them and try to be respectful of your time and come in with some pre-thought questions to the conversation. That said, for better or for worse, as a founder, I think you should come into every meeting situation assuming that that the person you're talking to knows nothing about what you're doing, because you're as a founder, you're selling all the time. You're selling people to come join you to work for you. You're selling people to invest in you. You're selling customers, etc. And so even though we ideally have had already reviewed your materials. At a minimum, the website or some sort of one pager, but ideally it is a pitch deck, again, to agree to make sure that there is some strategic alignment between what we're investing in and what you're building. And then this conversation is meant to get into a lot more color. Now, you didn't ask this, but one question that you might be thinking is, do I use my pitch deck, or do I go through my slides in this conversation? Great question. I'd say the way that we generally approach it is it's more of a conversation. But that said, that only works if you've already shared the deck beforehand. If you haven't, and then it probably would be more wise to go through the pitch deck if it's the first time. But again, ideally, you share it beforehand. You say, hey, and ideally the people that you're going to pitch are respectful and spend some time reviewing it beforehand. But irrespective of that, I would, if I was you, assume that nobody has reviewed it because people are busy, whatever. And at the end of the day, you want to convince them about what your vision is, what your mission is, even if they haven't reviewed any materials.
Okay. Thank you.
No, thank you.
So I have a question. I understand like it's an introductory pitch meeting. We have a functional product, our MVP. During this time, will you be able to see that? Will you be able to interact with it?
Great question. We're big fans of demos. I'd say in the first pitch meeting, it's a bit of an art depending on how this Q&A goes. I would say in your high-level company overview, you can just allude to the fact that you have a demo that you would like to go through if there's time allotted. And some investors are very product forward and they're going to say, yeah, that's the first thing I want to see. Some want to dig into the market, or you never know what the investors what their kind of focus is or will be in the conversation. But if you do have a demo that is live and ready to go, strongly advised to have that at least ready and teed up. And in the worst case that you aren't able to show that during the conversation, just do a Loom recording or whatever recording that you want. Upload it to Google Drive and then send that 2-3 minute as a follow-up kind of as a follow-up takeaway for the investors, and to give them more, to kind of keep them engaged. Again, if you're not able to go through it in the introduction, in the first meeting. But for us, just for more context, if we're not able to have gone through in the first meeting and the first meeting went well, we want to dig in with a different subset of our team. We'll encourage the demo to be at that point in the second or third conversation. So this is a high-level overview of the different types of questions that you can expect. I say can expect because oftentimes whenever it's a really good initial pitch from the founders in terms of introducing themselves and the company, believe it or not, a lot of these questions can be answered in that about 3 to 6 minute pitch. That lays the groundwork and the foundation for that conversation. And whenever it's done really well, it's great. I will say it does require practice in terms of being able to be so concise and succinct that a lot of our questions as investors are answered. A lot of the, I would say, like more entry-level, basic high-level questions are answered in so much as after you share your introduction, I want to get into the very specific nuanced questions. And that's really where you want to go to. You want to know that this investor is asking like not super basic questions, but if they are, that might mean that your introduction didn't really set them up for understanding your company at a super high level. So what do I mean? So team, again, these are all very basic questions, but oftentimes founders really want to focus on one area over others, so they might leave it out or they might glance over some details, but we want to understand who you're building this company with. If it's just you on a solo founder, that's fine as well. But I would highlight if there are any other advisors, any other mentors, any other folks that are contributing in some way. And then if there are co-founders, one of the questions that we typically ask is how you split up responsibilities. Sometimes we see co-CEOs. sometimes it's more self-explanatory. The CTO, the CEO or COO, CEO, etc. But we want to understand a little bit of that nuance. And on the product side, this is where, especially for us, because we do pre-seed and seed, we've invested in all stages of the company, pre-product, pre-revenue, post-product, pre-revenue, post-product, post-revenue, all of the different hyphens you can think of. And so for us, it's a little frustrating whenever we end the call not knowing where the company is. Not because we want to judge, we want to assess the company based on where it is. And if we don't understand that the company is pre-revenue, but in the conversation they talked about paying like some sort of dollars between people, then in our heads we're thinking, are they post-revenue? So you just want to be as clear with, hey, we have beta users or pilot users, or hey, we're launching our app next month. We have an MVP in Figma that we're happy to share and walk through. But be as clear as possible with where you are with the product, and where you're hoping to take it with the funding that you are trying to acquire. We want to understand how you generate revenue, or how you plan to generate revenue. This can be basic, and then depending if you're post-revenue or pre-revenue, you can just share high-level monthly subscription or direct transaction fee, etc. And then the third bullet is the value proposition for the target customer. We often like to walk through a case study of, hey, this is our initial target customer. This is how we found them. This is why what we're building resonates with them. This is how they use the product. This is how they paid for their product. Kind of taking it very basic steps, so that we can really get a crystal clear understanding of who you're trying to serve and how you're serving them. Because if we leave the call not convinced or understanding that there is a need for your product, and that you understand who your value proposition resonates the most with, then we're not going to feel like there's a big opportunity here, even though there might be. It just we weren't able to understand that vision from the founder. The next bullet around go-to-market strategy, because you're a startup, you have limited resources, you're in the early stages of your company's journey, you want to figure out, you can't just say, I'm going to serve every single American in the US, and that's just not feasible. And so we want to understand exactly initially who your, oftentimes you might hear or read in articles, beachhead. We want to understand who is your target users, target customers, because oftentimes that's where your limited marketing dollars are going to go towards, or marketing efforts are going to go towards, is attracting those communities to understand, to educate them about your product, and ultimately get them to become customers. So we want to understand, what is that strategy? Marketing competitive landscape. It's rare, but we still hear that somebody says we don't have a competitor. Oftentimes you're going to have, and it's, yeah, I would advise to be very cautious if you ever say that, because we see dozens and hundreds and thousands of pitches on a weekly, yearly basis. And so it's very high likelihood that we've seen something else that's similar, if not from an early stage perspective, then there's just probably some sort of market leader. And so we want to understand who that is, especially if it's a space that's not very consumer forward. So like if me as just a general consumer that goes about my life, doing my normal day-to-day activities, if it's maybe more healthcare focused or more of a nuanced sector, it's especially important to enlighten the investors and educate them about the space. And definitely don't shy away from competitors. Everyone has them. That's not a negative thing. We just want to understand why is what you're building different, and different enough in a way that you are able to create a large business in this category. And then to the second point of why is this the right time for the opportunity, there's a little bit of waves that we see in venture where somebody tried to do something 4 or 5 years ago, and that may not have worked then because the market wasn't ready, technology wasn't ready. I mean, you think about AI, VR, so many other technologies that are out there, and they might be too early for their time. And so we want to understand, why is now the right time for this business? And then lastly, on the fundraise, assuming you are fundraising, which is why you have a pitch meeting set up with this investor, a quick understanding of where you are, how much you're trying to raise, and where you are in the process of that fundraise. Why that matters is because the investor has their own mandate. For example, we prefer to lead. We have certain ownership targets. And so if we are unclear of where you are in your fundraising journey, it might not be a great use of your time, depending on where you are. So for example, if you're just looking to round out the rest of your round, you only need a couple of $100,000 more, we're writing $1 to $2 million checks. And so it might not be a match from a stage perspective or a dollar perspective. And then second to that, we want to understand what you're hoping to accomplish. It's almost an equation that you can get down, but it's actually not as common that we see founders share. But if it's a high level equation of, we are raising X amount of dollars to accomplish A, B, and C, and we're going to do that by doing 1, 2, and 3. And so super high level, super basic. But again, it's not super common that we're able to find founders that are able to get that really crisp. And the reason why we want to understand this is, one of our markers of success is getting you to the company's next stage of your journey, which very likely means another round of capital. Again, we're investing at the pre-seed and seed, and so there will most likely be another set of investors that will come invest after we do. And we want to make sure that you and the business are set up with our capital to reach the next milestones. And so we want to understand that you have an understanding of what those milestones are. And we also want to understand how much you've previously raised. This last one primarily comes into play when we're talking about dilution. So if you've already raised $5 million and you're trying to raise some other amount, for us, that typically we don't see companies that have raised that much money that are talking to us, because again, we're talking to companies that are pretty early on in their journey. So a ton of questions, but when done really well, an initial pitch can go really far in answering pretty much all of these questions. Again, you can have 5-6 minutes where you cover all of these, but let's pause here to see if there's any immediate questions or reactions.
Hi, Jesus. My name is Jason Crockett. I'm working with a company, Lamar IoT. That's a Lacey-based company here in Los Angeles. And thank you for this. It's really helpful, the typical questions, because I think it kind of provides a blueprint for the things you want to make sure you're addressing in the pitch. We've started raising early stage seed round, and we've had 2 investors now ask about terms. And so I guess in these early conversations, how prepared should we be to speak to the terms of investment, particularly like equity stake? And yeah, I'll just leave it there.
Yeah, thank you for the question. I'll tell you how we tend to approach it. And again, this is one firm's perspective. We typically don't ask for terms unless the founder in their fundraise overview tells us we have a lead secured, and we only have 50% of the round left or something of that nature. Because at that point, we need to know that information, because if what that information is going to tell us means that we're not able to hit our target ownership, then it doesn't make sense for us to continue it doesn't make sense for us to likely continue the conversation unless it's some extreme situation where we'll invest outside of our core strategy, which again is not very likely. And so we tend to not ask for the terms flat out. but we do want to understand where you are in the process. And oftentimes we can derive where you are. So what I mean by that is if you tell me, hey, we're fundraising X amount and we have 60% committed, I'm going to assume that you probably have a lead because that's a lot of amount of the round to already have committed. And so in that case, I may ask, have terms been set? That doesn't mean you have to share the details. That said, this is just for an initial meeting. I'd say if things evolve to a second and third conversation, it's probably more likely that we'll ask for the actual terms at that point if there are terms set. Now, another question that you aren't asking, but I guess I'll share my 2 cents on is around, and the way that we generally approach it is whenever founders are setting their own terms, I would be cautious about doing so, not because you shouldn't have an appreciation for the value of your business and what it's worth, quote unquote. However, especially at the earliest stages, what you want to find is the right partner. And if you find the right partner, the terms and the details should be hashed out after there's been some sort of mutual agreement that you want to be involved, that the investors want to be involved in the company. And at that point, it's a conversation. But if you're from the moment you have a conversation saying I'm raising X at Y, again, we still see it. So some founders do it. We saw that a lot more 2 years ago, whenever we were in a very strong founder-friendly investing environment. I'd say right now, February 2024, it's much different than it was 2 years ago. And so you want to understand what environment you're in and adjust accordingly. So again, that's why I say it's more of pitching and fundraising is more of an art than a science. But hopefully maybe that addressed a little bit of your questions there.
Yeah, definitely. Thank you.
Yeah, appreciate the question. Yeah, and then maybe just some other quick thoughts on that. If you talk to an investor, you can also yourself derive at, is this a potential good match for my company by what they share? So what I mean by that is we do this in our introduction. We say our average checks are X, and we typically look for blank % ownership. And you can quickly do the math that is that aligned with where you're hoping to raise at. If it's not, then again, you can ask, how flexible are you or whatever, but I wouldn't want that to be the very first conversation or you to trip up about those details in the very first call, because at the very first conversation, you're both trying to figure out, is this a good potential match? I'll see if there's any other questions. Please.
Actually, yes. Specifically for Slauson Co, you said you guys are writing $1 to $2 million checks. So as the lead investor, I guess how much additional involvement do you have or do you want to have, once you make that investment? Are you taking a board seat? Are you just an observer? How involved is Slauson Co afterwards? Do you make your companies that you invest in go through your incubator?
Sure. Thank you for the question. I'll answer it, and then I maybe let my colleague Eileen shed any color on that as she's on the platform team. But the short answer is we hope to be as involved as needed. We're not going to run the business because that's not our job, but we want to be as supportive as we can be. Now, what that looks like is immediately after investing, we have what we call an onboarding curriculum, which typically lasts about 6 to 7 weeks, where we're meeting weekly and setting up a strong foundation for the working relationship, setting goals and talking about key performance indicators and setting strong timelines, understanding where the support is needed. Every company is different. And so at the onset of once we've invested immediately, we want to understand how can we get involved. And then we activate the ANCO, as I mentioned, people in our network or our own resources that we have internally to make sure that we're able to get you to accomplish your goals in as fast of a way as possible. The last thing I'll say, and I'll let Eileen shed any color, is we also have, we try to make sure that we are connecting our new portfolio company founder with the rest of our other portfolio company founders. And we do that in a couple of different ways. We have a yearly, we call it Slauson Summer Camp, where we bring all of our founders together. And then we have quarterly touch points where people are going through a different topic. And these are including all of our portfolio company founders. Eileen, please share any other thoughts there.
Yeah, I think you touched on most of it. Our approach is really in between. We call ourselves in between a coach and a cheerleader. We are really here to support you on your journey and where you want us to plug in, whether it be customer intros, investor intros, just being a sounding board. We have regular calls with all of our founders, and a lot of our founders have found really great community with each other. And it's just really cool to see how they foster that. But yeah, a lot of our support is tailored around what the founder needs at that time.
Yeah, and the last thing I'll say to answer your question, we do take a board observer seat. Yeah, and it's a board observer seat on purpose. We always want to be aligned with the founder and their mission.
Thank you.
Awesome. Thank you for the question. We'll get into this question, which hopefully is maybe not the most important, but gets into the nitty-gritty of our tips and advice. And so, again, the preface to this is, if you have a strong introduction, that can go a really, really long way. The way that you're able to get that, we found, is just through practice. So practice makes perfect, and that applies in this case. And so if you are able to have a strong introduction, you really are able to make those 20-minute Q&A much more meaningful in a way that makes them want to continue to engage, continue to learn more, eventually leading into diligence and hopefully eventually into an offer. And so, quick high-level do's and don'ts. I'll speak through these, but then I'll add some color as well, and my colleagues can also shed light on any of these. We touched on some of these already. For example, the first one, we strongly recommend sending materials ahead of the meeting, just because we want to make sure it's a good use of both parties' time, but also do a little bit of our homework, again, and come to the meeting as prepared as possible with a couple of pre-vetted questions on our end. Again, be succinct, which requires practice. Keep it interactive, which is the other side of the don't story. We've had cases where a founder spends the 25 minutes they have talking about themselves and the company, and the 25 minutes after our 5-minute introduction. So there's literally no time for us to ask any questions, and the founder has spoken for the entire time. That you don't want to do that, because this is your one shot oftentimes to engage and figure out, what is this investor looking for? What do they not understand about what I'm doing? So make sure that you are pausing to ask if they have any clarifying questions as you go throughout the conversation, because you just want to clarify uncertainties as quickly as possible. Another point which we alluded to earlier, sometimes we see people with 3-4 plus co-founding teams, and that's not a negative thing, but we would advise for the first pitch meeting, keep it to 1 to 2 people max. If in those second and third conversations you want to bring in other members, we would encourage that. But just because of the flow of most conversations, you don't want to have too many cooks in the kitchen, so to speak. Somebody earlier talked about a demo. Encourage that, or at a minimum, encourage you to have that open and ready to go. And you can mention that you would like to do one if there is time, and if not, just feel free to record it and share it afterwards. Be mindful of time. Again, it's an art more than it is a science, but you want to make sure that the initial pitch goes really well. Stop for pauses. Pauses are your friend. I know whenever someone's public speaking, a 1-second pause can feel like a lifetime, but they go a long way. People need time to process information. People need time to digest And so don't be afraid of them. Take a sip of water, pause to ask questions. And this next point is to do your homework on the fund. We do, or we attempt to do a good effort of putting things out there so that founders understand who we are, what we do. So the deck that we shared in the chat is one that we have in our calendar invite whenever we are going to engage with a founder so that they understand a bit more about us. We introduce ourselves. We have things on our socials, on Medium, and we post things as well. We have these sessions on our YouTubes. So encourage folks to share, to do their research as it relates to what the company, what the firm that they're engaged with looks for and how they operate, so that you're not asking very introductory questions whenever you are able to ask them questions, and you're able to get to much more nuanced questions about the firm and how they support founders, maybe asking for some examples, et cetera, as opposed to just the very high level, like how, what are your check sizes, et cetera. And I will say a lot of firms don't make that information readily accessible. So it's not negative. It's not a negative thing if you do ask those questions, but depending on the firm, they might put that out there again in an effort to make sure that you are aware of that firm's focus and strategy. The very last bullet is, now, I won't say in this post-pandemic world, but now, as opposed to 2 years ago, meeting in person is much more common, and there's geography constraints, of course, but if you are able to meet somebody in person, we as a firm have events across the US. We will be at South by Southwest in Austin next month. Some of our team members are going to be in different cities as well, where we host different events. We did an event in Atlanta last year. So if you follow our socials, we'll make an effort to go to different cities. And so try to meet with people in person if possible. On the don't side, I already talked about this, but if it's been 5 minutes and you're still talking, definitely time for a pause, for a break, for a breather. Ask if there's any clarifying questions. There was an earlier question about the pitch deck. We as a firm prefer to keep it more conversational, more so on the first pitch meeting. But again, this only works if we've already had a chance to review the materials beforehand. And we don't discourage the use of slides. If a slide, especially for some more visually, if you have a diagram that you want to show, feel free to pop that up. That's not a negative thing if you do use a slide, but you don't want to use it as a crutch and just read off of the slides, because that's not a good use of your time in trying to sell the company and the vision to an investor. And then lastly, again, we try to put information out there, but if for whatever reason you're talking to investors and you have questions, ideally you are able to ask those questions at the end of the conversation. By questions, I mean questions that can help you figure out, hey, do they lead? Because not all funds lead. What are their average checks? What are their average ownership? What stages do they have? Anything that they don't invest in? The question earlier around how they support companies. So ideally you are left with a couple of minutes to answer these questions, and ideally it's not one-sided. We certainly hope to not make it one-sided in conversations that we engage with founders. But again, every firm is different. So you want to make sure that you're able to get your questions answered, because if you don't, you're kind of left in the dark afterwards, not really understanding why, let's say in the case that they don't want to continue the conversation, maybe it was a simple reason in terms of like they invest too early or too late, but however, that wasn't communicated accordingly. So that's all that I have as it relates to pitch practice, or pitch best practices. Do another quick pause here to see if there's any questions on anything that we've shared. And if there's not, we only have 10 minutes, but we also want to leave time for any other questions that are not pitch related.
I have a question. How you doing? My name is Abrima. I'm a founder and CEO of a startup called TBA. We're an event ticketing company that's trying to democratize how live events are monetized for young creators and artists. And I had two questions. So what are the things you look for in a startup? And like, what are some industries that you all are, sort of doubling down on? And my other question is, how you guys look at price rounds versus like notes and things like that.
Yeah. I think those are 3 questions, but and I'm
Right.
gonna try
Sorry.
no, not a problem. I'll try to hit 3. Maybe I'll do them in reverse order, and my colleagues can add color as well. How we view price rounds to safe notes to convertible notes, we don't have a strong preference either way. We're pretty flexible. I think oftentimes for a pre-seed round, which we could have a whole nother conversation of what is a pre-seed deal. But let's say if you're raising sub $1.5 million and it's the first time you're raising institutional capital, a safe note might be the easiest way to go. Just from a cost perspective and a timing perspective, it's pretty efficient process. If you're raising a seed round and it's call it $3 to $5 million, that's likely where you're going to want to price it, especially if you've already been taking a lot of investments on different safes. A price, and again, this is a whole other conversation that we could have, but a price round allows all of those safe note holders to convert their notes into actual equity. That said, it is a more time-intensive process. It's more paperwork, lawyers are involved, which means dollar signs. And so, and then convertible notes is somewhere in between. There's a little bit of additional cost as compared to a safe. And I'd say the majority of cases, especially at the pre-seed, it's more safes. Safes, it's probably skews a little bit more towards price rounds, and then convertible notes, we see them here and there, but not as common. So we don't have a strong preference. Your other question was around industries. I'd say us at a high level, because we're investing at the pre-seed and seed, we're less industry focused and more focused on what the actual impact of the company, who the intended audience is. So for example, our 2 main areas of investment on the B2B side, it's SMB tech, which we define as tools to support small business owners. And then on the consumer side, it's products or services that are targeting overlooked customers. So it's very broad on purpose so that we're able to let the founders educate us on why their opportunity is large and why it's unique as it relates to what they're building. And then how we look at companies. Again, this is a short answer to a very much longer one, because we invest at pre-seed and seed, and we have an accelerator. So I will say we care a lot about who we're investing in terms of the team, because we are at the earliest stages and we're going to be working a lot with you. And so we want to understand what it is that drives you, what it is that has led you up to this point. How are you able to attract talent to work with you and get them engaged on this mission of yours with the company? And we care about the other things as well, in terms of can this market that you're going after sustain a company that's generating ideally some sort of multiple $100 million revenue in the next 5 to 10 years, and we understand how this product is unique. So all the same things that any other firm is going to care about. I mean, really, as it relates to the typical questions, we care about all of these things. It changes based on the stage of the company. So if you're pre-product, we're going to care a little bit more about the team. But if you're post-product, we're going to care a little bit more about the product, just because you have more to speak to, you have more to analyze. But I'll see if any of my colleagues have anything else to share. No. And if you have any other follow-up questions, please let us know.
No, that was perfect. Thank you.
Thank you for the question. We have about 5 more minutes. Feel free to share any other questions folks have. Thank you all for sticking around, some of you. And if you don't have more questions, we won't hold you hostage.
There's a question in the chat.
Oh, thank you. So a question around a good way to show made up. So the question around culturally aligned. So this depends on what it is that you're building and what community you're going after. Excuse me. Some examples of other portfolio companies that we have that fall under the culturally aligned consumer umbrella. We have a travel tech company that focuses primarily on women. We have a social space for folks who identify as LGBTQ. We have a dry bar for women with textured hair. So 3 different examples of a company going after a different subset of the population, or that generally speaking has been underserved in different ways. For the social space for folks who identify as LGBTQ, the traditional social media platforms can be sometimes hostile to that community. And so it's up to the founders to educate the investors on why this community has been to date underserved. And so the way that you do that is by describing the nuances of that community or that target customer, and why what's currently available on the market isn't meeting their unique needs. And so if you're able to do that and convey the opportunity, and ultimately that's the problem that you're going after, then you come in with what you're building and how that addresses this unmet need for this population. And if, again, depending on if you're pre-product or post-product, if you're post-product, then you're able to let the customers and users speak for the product itself, because they're using it, they're engaging with it, they're buying it, etc. But if you don't, then you try to find other proxy ways to show that there is a need or demand. You can do that through wait lists, you can do that through interviews, demos, different ways. And so it really depends on what stage the company is. We might have time for one more quick question. Thanks again for joining us this Tuesday morning, everyone.
Thank you.
Yeah, if there's not more questions, we can give you a minute or 2 back. We host these monthly. If you follow us on socials, you'll see the different topic that we're covering that month and the sign up form. So again, I appreciate, we'll send out feedback forms as well. We're always looking for ways to improve and better serve the founder community. So please fill that out whenever you get it via email. This will be recorded, so you have it on YouTube to refer back to. And if you have any questions, you can reach us on our website or meet us at slauson.co. And hope you have a great rest of the week.